For a deeper look at some global themes in markets, Jack Lowenstein, the Managing Director and Co-Chief Investment Officer at Morphic Asset Management, joins us now live. Jack, thanks for joining us. Now, let's talk Canada here, as Tony Abbott used to call it. It is seen as, being equal in many ways to Australia, but I know you've been watching the banking space there, particularly perhaps the smaller lenders.
Yeah, well, it was a very exciting week last week. One of the alternative lenders there, Home Capital, was down 65%. Because
you say exciting, that sounds pretty grim.
Yeah, well, we weren't on the other side of the trade, but there were a lot of people who were shorting the stock, and they were right. The reason it fell so sharply is because the depositors got very nervous about the quality of the bank's mortgages and basically pulled about $1.5 billion over the course of 4 weeks.
Wow.
Yeah, that's pretty scary stuff.
All right. Now, why were they worried about the quality of the mortgage lending, you say?
There were two reasons, I think. First of all, in Canada, about 7% of all home loans are funded by alternative financiers, whereas it's a much smaller amount in Australia. And they tend to use mortgage brokers, and the mortgage brokers are often encourage borrowers to essentially lie about the strength of their income and their assets.
Oh, gosh.
Yep.
All right, so sorry, this is just set the scene. Home Capital Group, are they in Ontario, which is the largest state?
Yep, they're in Ontario, and they're exposed to the Toronto property market. And what I find very concerning about this is that Canada is probably about 6 months ahead of Australia, I think, in terms of the house price cycle there. And in Toronto, prices have basically just flatlined. They haven't gone down yet. In Vancouver, they started to fall, and in Calgary, which is a part of the oil patch, they've fallen quite sharply.
Wow.
But what I find really scary is it doesn't take much for pressure on the banks to emerge when house prices start to cool. And what is even more scary, I think, is why they're cooling.
Yeah, all right. Well, tell us.
And that is that the regulators are pushing up, are forcing the banks to tighten up their lending standards. And the provinces, which are equivalent to our states, are levying punitive taxes on foreign buyers. This all sounds familiar.
It does. I can hear an echo going on. But, I mean, you say, we started out the conversation saying this Home Capital Group and some of the lenders actually help people lie on their applications. I mean, is Australia going down that path?
I would put it slightly, they know the brokers help them lie, let's put it that way. Is Australia going in the same way? I think not nearly as bad, but I think the trouble is Australian housing is much more expensive even than Canada. So when things do start to roll over, as the regulators exert more pressure, we could see quite an alarming uptick in bad loans and more pressure on margins.
Yeah, okay, so very briefly, Australian banks, do they make you wary because of that, and are you shorting them?
We're not shorting them, but we are very wary of them. The thing that really concerns us is the quality of their deposit bases. Canadian banks lend out about 80% of their deposits. Australian banks lend out about 110 to 120%. So if there's any kind of anxiety about the quality of assets and depositors get nervous, it gets very alarming.
All right, Jack Lowenstein from Morphic Asset Management, thanks so much for joining us. Great to get your insights.
Thank you very much, Helen.